Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at bar chart. So this is the technical analysis series, and in this we'll be covering the basics of the bar chart. So what is a bar chart? First of all, bar chart is a different type of chart like the candlestick charts and the line charts. So stock market analysts and traders can use the bar chart to understand the stock price movement and get an idea of how to make their trading decisions based on how the charts are moving. So, bar charts show multiple price bars over a period of time. Each bar shows how the price has moved over a specific period of time. A daily bar chart shows a price bar for each day. Technical analysts use the bar chart or other chart types like candlestick charts or line charts to monitor the price performance of assets, which aids in making trading decisions. So, bar charts allow traders to analyze trends, spot potential trend reversals, and monitor volatility or price movements. So, here we have two examples. So, here in the up we have OHLC bar, and this is an update bar, and we can see the example of how a bar chart will an individual bar will look like. And below that we have the uh, OHLC bar for the down day. That is, so these are two bars which will appear on a bullish day and a bearish day. So let's see how it is constructed. So a bar is constructed with one vertical line and two horizontal lines. These provide for the depiction of the open, high, low, and the closing prices. So this makes it known as the OHLC bars. The vertical line, referred to as the bar, represents the range of the price data for the specific time period. So in this example here, we have this is the high price and this is the low price. So the if we have a daily chart and we have the high and the low, this entire range is the trading range of the day. And here we have the opening price and here we have the closing price. So this shows a bullish bar chart bar, and here we have the bearish uh, example. So this is the range for the specific day. Here we have the high price and here we have the low price. This horizontal line here shows the closing price, and here we have the opening price. So one thing to note is that the opening price will always come on the left side of the bar and the closing price will be on the right side of the bar. So that's how we can know that whether it's a bullish or a bearish chart. So when the opening price is low and the closing price is above it, this is definitely a bullish chart. And here on the right side one, we have a bearish chart because the opening price is higher and the closing price is lower than that. So how does the bar chart work? A bar chart is a collection of price bars with each bar showing the price movement for a given period. So each bar has a vertical line that shows the highest price reached during the period, as we have already seen, and the lowest price reached during that period. The opening price is marked by a small horizontal line on the left of the vertical line, and the closing price is marked by a small horizontal line on the right side. So as we have seen this example here, the left side is the opening price, and in the right side we have the closing price. The length of the entire bar gives you the trading range of that specific time period. The lower end being the lowest price, and on the top end we have the highest price. So if a closing price is above the opening price, as we've already seen, the bar may be colored black or green. So this will indicate that the chart is bullish. So if the closing price is below the open and the price has dropped during that period, so it could be colored red, indicating that this is a bearish movement on that time, on that period of time. So color coding the price bars depends on whether the price moved higher or lower, and this helps some traders see the trends and the price movements more clearly. So color coding is available as an option on most charting platforms. In this also we can see, given the example here, we have the green bars and the red bars to indicate whether it was a bullish movement or a bearish movement. So traders and investors decide which period they want to analyze. A 1 minute bar chart, which shows a new price bar every minute, and this would be useful for a day trader but not for an investor. A weekly bar chart, which shows a new bar for each week of price movement, may be appropriate for long term investors but not so much for the day trader. So, in this, we have the day chart, the daily chart. So, each bar here indicates for 1 day. The price movement of 1 day is indicated in this one chart. So let's see how this is interpreted. So long vertical bars show the big price difference between the high and the low of the period. That means that the volatility increased during that period. So when a bar has very small vertical bars, means that there was less volatility. If the large distance between the open and the close, it means that the price made a significant move. If the close is far above the open, it shows that the buyers were very active during that period, which may indicate more buying in the future periods. This is forthcoming. If the close is very close to the open, it shows that there was not a lot of conviction in the price movement during the period. So let's look at this in the chart. So here we have examples. So here in this specific candles, this bar, we can see that there was a significant price movement and it was volatile. So we have the opening price and we have the closing price. But overall, the length of the bar itself indicates that the price movement was indecisive and volatile. And to give one more example of a not so volatile movement, we have here this small bar, which almost looks like a plus mark, shows that the specific movement was almost negligible. And here is one more example of this. So these two bars are also very small, and the opening price and the closing price is very close to each other, and in this it's almost a plus, or looks like a doji from the candlestick chart almost. So this shows that there was not a lot of volatility. There was a slight bit of volatility, but since the opening price and the closing price is very close to each other, there was a slight blip and it moved back to that specific price. And to see a very small movement, here we have a bullish bar. This shows a very small movement between the opening price and the closing price. So in this way, you can convert your candlestick chart to a bar chart to get an idea and get some experience using this bar chart, as you might find this more useful when you are trading. So the location of the close relative to the high and the low may also provide valuable information. If an asset rallied higher during that period but close was well below the high, that shows that toward the end of the period sellers came in. This is less bullish than if the asset closed near its high for the period. If the bar chart is color coded based on whether the price rises or falls during the period, the colors also can give information at a glance. An overall uptrend is typically represented by more green or black bars and its strong upward price movements. Downtrends are typically represented by red bars and strong downward price movements. So here again we can see here we have a downward movement and we have all color coded red bars. And here we have in this three green bars showing a upward movement here. So this indicates how the color coded bars might be useful in giving you just an overall view of how the market is trending. So that's how the color coded bars give you a quick idea of the trend of the bar chart or the market movement, price movement. So compared to candlestick charts, let's see how bar charts are. So bar charts are very similar to Japanese candlestick charts. The two chart types show the same information but in different ways. A bar chart is composed of a vertical line with small horizontal lines on the left and the right, which show the open and the closing price. Candlesticks also have a vertical line showing the high and the low of the period, but the difference between the open and the close is represented by a thicker body called a real body, and the body is shaded in or colored red if the close is below the open. The body is white or green if the close is above the open. That is, if the candlestick is bullish, then the body of the candlestick will be white or green. And while the information is the same, the visual look of the two chart types is different. So when the candlestick is bearish, it will be in black or red, indicating a bearish candlestick chart. So both bar charts and candlestick charts might show the same information, but the visual look is very different in both of them. So here are the sources for the specific uh, educational material which we have taken. So you can also check it out if you're interested. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to start trading in the stock market, you can create your Demat account with Alice Blue. With Alice Blue's brokerage services, you can get excellent exposures and margins for trading in the stock market. So just click the link in the description and fill out your details.